Hey, how's it going, everybody? Welcome to another episode of the Path to Profit podcast. If you're joining me for the first time, my name is Bobby, and as I do every single week, I'll be sharing everything that went on in the major indexes, industry groups, and much, much more to get you ready to trade for next week. So, without further ado, it's time for the Rapid Review. All right, so as always, agenda and timestamps are down in the description if you'd like to jump around, but make sure you stay tuned to the very end where I give my 0 through 10 rating on this market so you can see where I think this might be going. But let's get started with the current state of the market. Market direction. We have been in an uptrend for some time, and we have now switched to uptrend under pressure. This is simply a stance by IBD to say, we should be cautious. Does not mean this uptrend is over. It just means that things have occurred that say we need to be a little bit cautious because this could turn in the opposite direction. The power trend is now over as we broke below the 21-day exponential moving average. And you can see the big thing is distribution count has gotten higher. So we ended last week off with 3 distribution days on the S&P, 2 distribution days on the NASDAQ. And on Tuesday, which was the first trading day this week because the market was closed on Monday, we gained a distribution day because we were down on volume on both indexes. We're still 34 days in the uptrend. But let's look at those distribution days. So you can see these on our distribution day tracker, which is here to take a look at and see clustering and see if any distribution is primed to fall off. Big thing here you can see is the January 27th distribution day. We'll be leaving this index next week. After 25 days of trading, you drop off that distribution day. So we are set to lose at least that one distribution day due to time. The other days will not be falling off, and they actually have some ways to go if we're going to get 5% above the close of that distribution day to eliminate them. So definitely seeing a lot of distribution coming into the market, and part of the reason why we have switched to an uptrend under pressure. Not the only reason, but part of the reason. So again, we'll do this every single week so we can keep track of what's going on in terms of distribution. And it's a good reason to subscribe and turn on notifications so you can see us doing this every single week and stay up to date on distribution days. Current state of the market, looking at the moving averages. So you can see that on the S&P, we broke below the 21 and the 50 day. On the NASDAQ, we broke below the 21 day. And on the Dow, we broke below the 50 day. The break below the 50 day is definitely a big negative sign. Seeing it happen on the S&P. Good to see that we're above it on the NASDAQ. But nonetheless, negative sign to see breaking below any sort of moving average. And now you can see we're below the 10 and the 21 on all indexes. We broke below the 200 day on the NASDAQ. As you can see, we're just below that. And these are all key levels that we've really been watching. So something to take note of. For the week, the S&P was down 2.67%. NASDAQ was down 3.33%. And the Dow was down 2.99%. Big down weeks. And then you can see for the S&P, 2023 up 3.40%. The NASDAQ up 8.87%, the leader for this year. And for the first time, the Dow has now gone negative. Dow down 1% for the year. So big change from where we were at last week. This is why it's important to always plan for both directions of the market, because we know that things can kind of go in either direction. And clearly a lot of the data has changed over this past short 4-day week. All right, so let's jump over to Thinkorswim and let's take a look at the NASDAQ. I like starting off with the NASDAQ. Being that most of the stocks we look at are growth stocks in this area. So you can see the short 4-day week. We looked like we were showing some support last week at the 21 day, and we broke below that support. We got rejected, going trying to break back above it, and then finished off the week closing below the 200 day. All negative signs. The 200 day was really important in my eyes in terms of a key level to keep an eye on. Ideally wanting to stay above that. You can see the 10 to the 21 day going in a downward slope, showing you that the short-term trend is in a downward direction. But you can still see the 50 day still kind of in an upward motion. So that's a positive sign to see there. That being said, look, we've had this big run up from this bottom over here at the end of the year of 2022, and we just shot up like a rocket. You can see there was like this mild pullback that we had like here, and that was about it for 2 days. This could just be a pause, a pullback, a healthy break that this market is going to take on an upward trend, but we don't know for sure. This could also be, if we zoom out, a complete rejection at this price level, going back to how we've been talking about the June 2nd high, and a back turn into a downward trend. Because if you're looking at this, I mean, really, we haven't really broken the downtrend. We have in terms of the channel, but we're not severely out of this woodwork where we're breaking through all these different price levels and making new grounds. And it's something to really, really be conscious of, that this could go in either direction. So to definitely just really take a break, don't be too aggressive, and let's see how this kind of all pans out. We'll look at the weekly. That's where you can see, again, we broke the bigger downtrend, but I think overall it's just, we still haven't started to make a ton of ground. There's a lot we could do to show that this market is going to be in a bigger, longer term uptrend. It's got a ways to go. With the S&P, very similar there. Like we said, break below the 50, but we also found support at the 200-day here. So that is a positive sign. So you can see that right there, finding support, good thing. But again, just downward on the 10 and the 21-day. And it's one of those things where it's just going to be a wait and see. I don't think that this market is saying everything's over, but I think it's saying everybody needs to take a break because this can go in either direction. We'll look at the weekly quick, and you have that there. But yeah, if you have anything that you would like to add, shoot a comment down below. If you have any questions, drop a comment down below. I think this is one of those where it was definitely a rough week, and we just got to see how we're going to respond next week before we know, is this uptrend over or is this just a break in the bigger move? All right, let's jump over now. We'll get started with the industry groups. We're going to be talking top 10, bottom 10 weekly performers, biggest jumps and falls in the rankings. And we'll look at the top 20 industry groups. All right, so here we have the top 10 weekly performers. You got building maintenance and services, big one up there. Definitely seeing a lot of the building products and home building doing very, very well. So not surprised to see a group like that up there. I'm surprised to see the oil and gas, which got annihilated last week, popping up there. But other than that, not much else to add there. You see retail getting crushed this week. You see some of the tech getting hit this week. Interested to see some of these, what were top groups like leisure and movie related that was making its way up, with Netflix getting hit, auto manufacturers that Tesla was doing well getting hit. Some of these, consumer product electronics, some of these stock groups that we thought were starting to turn around, really getting hit this week. So it'll be interesting to see how that, if we see a trend in that, or if it was just, again, a aggressive pullback. Biggest weekly jumps in the rankings. You can see electronic miscellaneous products making a big jump. Other than that, computer hardware, peripherals, consumer product electronics. Seeing some of those techs make a jump up there, so good sign to see. Drops. Oil and gas, I think that's the big thing. They were leading for a really, really long time, so seeing them kind of dropping out, something we've seen on a weekly basis that they've been getting hit, so not surprised to see them dropping out. All right, top 20 industry groups on the screen. Let's see. So definitely a lot. Here's the big thing that you're going to see when we talk about industry groups this week. There's been a lot of rotation, and it's something that I think every week we've been talking about it. There's been a rotation. There's been rotation. Now we're seeing it in the data actually happening in the rankings. And you're seeing these big jumps from number 57 to 19, 29 to 18, 33 to 16, 34 to 14. We're seeing this rotation. We're seeing this jumps. We're seeing drops from 5 to 11 and vice versa. So it's going to be important to really pay attention to these groups, especially if we're having these pullbacks where the relative strength really does shine. So that is, as of right now, I think there's a lot of rotation going on. I'm not going to spend too much time going in depth into some of these groups, but it's just something that we're going to have to really watch over these next coming weeks. So here we're going to talk top 10 industry groups. when we look at stocks, it'll be the Campos Composite as we do every week. And we'll be highlighting any actionable stocks on those screens. So, all right, let's jump over and let's start off number 10, which is auto, truck, original equipment. Big jump. Again, we're talking about that rotation, 22 to a 10. Other than that, not much to say there. Not going to go too crazy with some of these groups unless there's really something to talk about there. A lot of stocks to look at. Definitely take a look at some of those leading stocks, but really only one actionable. All right, we got number 9 now. Building maintenance and services. This is a huge jump, 58 to 9. Big move for the week. And I put in the RS line, this is rocketing higher. On the last 2 days, Thursday and Friday, this just went on a tear. You can see a ton of names in this group, but needless to say, I mean, that RS is just skyrocketing. So I pay attention to this group and see maybe what's going on here. Whenever you see something like that obvious, pay attention to it. Here's some of the names. Make those a little bigger for you guys. You can see those, but nothing actionable right there. All right, we got number 8 for this week. Retail, wholesale office supplies. This is one of those that it's declining. Going from 2 to 8. You see the decline there. So it's really all I got to say about that. Clearly, this is dropping out and no stocks to mention. We got building, residential, and commercial, 11 to 7. So jumping its way up, slightly up for the week. One of the themes I think we're all seeing is that building. That's one of those groups that is popping up everywhere. So pay attention to that. And in terms of stocks, there you guys go. Bunch of stocks to look at. A lot of actionable stocks. So really be conscious of that. All right. Number 6, we got leisure, travel, and booking. Another group that I think a lot of us have seen on our watch lists is the leisure and booking. So pay attention to that. Big jump up from 35 to 6. Anytime you see a jump like that, something you want to pay attention to. And one stock and one actionable, booking.com right there. All right, number 5, we got leisure, gaming, and equipment. Climbing up. It made it into the top 10 last week. It was number 9. Now it's number 5. Not much else to say there. And there you got your Churchill Downs has been the only stock we've been able to talk about in this group. So probably one that most of you have on your watch lists. DraftKings is another one that I think a lot of people have talked about. Doesn't meet the criteria, but I'm sure it's popping up on a lot of watch lists as well. All right, number 4, machinery, construction, and mining. See that there. Jumping from 10 to 4. And stocks in that group, 2. And we got number 3, oil, gas, field services. This is another one that's on the downtrend. You can see the RS line going lower. We're dropping from number 1 to number 3. Probably not really worth paying much attention to. It seems to be one of those groups that's falling out, and there's a couple stocks, fewer actionable. But this is one of those where probably not going to really worry about any of these stocks of this group because it seems like they're on the downtrend compared to everything else. Then we got number 2, leisure, movie, and related. This is your Netflix, your Roku, that group. RS line flat is the big thing that stood out to me. Yeah, look, Netflix really an old leader, not something that's super interesting to me, but nonetheless something to pay attention to. And IQ is the only stock that continually pops up there. And then we got number 1, commercial services leasing. This is from 4 to 1, so we got a new leader this week, and a couple stocks in there, one actionable. So do some investigating there, especially when you see the new number 1 stock, and there's some stocks to look at. Always worth paying attention to. So, yeah, that is all we have for the industry groups this week. So now, next up, earnings. Got a bunch of earnings on the screen. My new thing I'm doing with earnings, is I'm doing only 90 composite stocks or higher, just to simplify things. I think the big thing is always to be conscious of any stocks that you own that are reporting. So that's very easy for most people to do. But looking at the 90 composite stocks are better. See what they're reporting. I'm going to share those with you every week. You can screenshot and take a look, but you have them for this week. Now, stance on the market, 0 through 10 rating. Where do I think this market is going? There you guys have just kind of what every single kind of bracket means. So last week I was a 7.1. I've been starting to kind of go in a lower direction with how the market was acting. Now for this week, there it is. It almost falls down. There we go, 5.6. So dropping into that cautious, but leaning towards bullish. Now, look, clearly, once these key levels are getting broken, the 200-day, the 50 days, it's something to be aware of. It's something to really make you say, all right, I got to maybe take a step back. I got to maybe reduce some risk in the market, because you want to see support at those levels, not a break of those levels. That's the first thing. But it was also just one rough week, and we've gone up like a rocket ship so far this year. So it's something that kind of is somewhat expected. But again, you'd like to see more support at those key levels versus breaks at those levels. The thing that's making me leaning bullish versus leaning bearish is really what I'm seeing in the stocks that I own, as well as some of the stocks that are on my watch list. There are breakouts. There are breakouts working. There are stocks that I own that have gone up and barely broken their 10 or their 21-day moving average. They basically pulled back and, kind of went a little sideways action with the market, showing some relative strength. We're seeing a lot of rotation going on in the market. So yes, I think from the overall market, things look somewhat concerning. But when you start looking at what could be the next leading stocks in the new market, they seem to be acting a lot better than the overall market, making me wonder, is this just a small pause and some of these leaders are going to continue to go higher? Now, with that being said, we don't predict. We don't sit here and try to call what's going to happen. It all comes down to what is the data telling us, taking the probability of the situation and using that to judge how much risk we should have in this market. And with that being said, that's why we're showing a 5.6 on my score. That's why I'm not sitting here and saying, well, my portfolio is doing fairly well. The stocks are doing fairly well. I'm bullish. I'm 100% invested. I'm going on margin. No. That's why I am probably like 60% invested right now, maybe a little bit more in some portfolios. When the market is showing that maybe there's higher risk to moving towards the downside, you got to take that into account. You got to make sure you're planning for both sides. And look, if this is going to be a very long-term uptrend, if this is going to be the big move that we hope it's all going to be, we're going into a new bull market, there's going to be plenty of merchandise, plenty of stocks, and plenty of time to get in on this market. There's no reason to be pushing and being super aggressive this early on when the market and a lot of stocks have a lot of work to do. So have a plan, do the work, and just take things as the information comes. Do not allow your preconceived notions of what you think the market should do cause you to make decisions in your trading. You gotta do everything based on what the market is telling you. The market is always right, and that's just the way you have to look at things. So that is all we have for this week. I appreciate everybody joining. Down here, click that, subscribe. Again, we do this every single week. And then up there, I have our Trader Talks. We only have one up there right now. And down there, chart breakdowns. Not doing a new one this week. Had a lot going on this week, and I wasn't able to get a new one out. And I think the only stock that I would say is SMCI. Take a look at that one. We've done a video on that, but things have updated. So take a look at that and then take a look at the chart. Other than that, that's all I got. Stay disciplined.